Everyone, it's Paul with Financial Source, and we are looking at the implied volatility levels for June the 24th, 2025. What is implied volatility? Well, implied volatility is the market's forecast, option market's forecast of, in this case, a currency's future price movement over a specific period of time, right? So it's what the options market is saying is going to be the up and down movement for tomorrow or the next day, right? Because the levels come out the night before. And from that implied volatility range, we're able to get very specific levels in the form of a first, second, and third standard deviation. And the reason it's so valuable and important is if we assume a normal distribution. Now, not all days are normal. You're going to have crazy days. But if you assume a normal distribution, then 68% of price action is supposed to stay within the first standard deviation, and 95% of price action within two standard deviations, and 99% within three. So when we look at these levels for the first, second, and third standard deviation, they're quite powerful, and they act as zones of support resistance. They're zones that institutions monitor. And so we've built something to really help you guys see exactly where these levels are and add them into your trading. So let's start out with the euro dollar for today. And if we pull up our handy tracker here, you'll see we go here Tuesday, we go to euro dollar, and we can plot these levels. So the first upper bound level, and this would be the one that price has to rise to get to, right? Or these are the standard deviation levels that it would fall to get to. These form nice support and resistance zones. So we look at the first one. First one is at the 116.35, and you can see this was just nailed today perfectly. There's a little zone right up here, 116.35, comes up and has moved away from that level. Didn't really get close to any other zone, so that's about all we have for the euro dollar. On the pound dollar, we had two zones. So it hit the first standard deviation, which came in right here, the 135.85, and you can see how it hesitated for almost an hour, like an hour and a half, hesitated, then broke through. And then the second standard deviation, remember, this is the one under normal conditions that the market should stay, 95% of the time should stay between. This one it did react off of, and we had an upper bound on the second standard deviation at the 136.48, and you can see if we just move this down just slightly, it ticked it just exactly right there. So that was the pound for today. Then we had the Swiss franc, and the Swiss franc, the franc was strengthening all day, and so it's kind of a good test because it was just slicing through every level that it saw. And here are the two standard deviation levels. You can see this is the first standard deviation at the 80.82, came in, hesitated for about an hour. Let's see, about an hour and a half right around this level before breaking through. And then the second standard deviation, it reacted off of. And then we move on to the dollar yen. The dollar yen really only had, these are their two levels. And this one, it didn't really react to. It kind of sliced through here, hesitated a little bit, and then moved down. And then we didn't really hit the second standard deviation for the dollar yen. And that's how it performed today. And then we have the dollar CAD. The dollar CAD just had this gorgeous level today at the 136.82. And it hit this level and just moved off it directly. This was a really nice level. I actually took this trade today, and it just popped down to this level and then moved up. And then we have the Aussie again. So here is the first and second standard deviations marked out on the chart. It just kind of messed around with this level. It didn't really move away from it, didn't really fall away either up or down. So it kind of acted as a band, support resistance band. And then with the New Zealand dollar, we had something similar. You had a couple really, I believe this was early in the morning, really early in the morning touches where it hung out here, reacted off this first standard deviation for about an hour, and then kind of moved through it, and then, didn't make it at all up to the second standard deviation. So, and those, that's a full recap of, the majors. So again, there's so many different types of strategies, but even if you had just, use these as strict buying or selling off of, right? You're watching price. This one's good. Depending on what you did with this one, you've got the Swiss franc here. You've got two levels that it respected before moving through. Dollar yen was really the only one that it just kind of moved through immediately and then took a little while and chopped around. And you had that beautiful CAD level as well. So that's a recap for today. See how those levels work. First standard deviation, second standard deviation. Those are generally the ranges that the currency pair will get to in that day. All right, everybody, take care.